Generally, I would say at this valuation, I am very comfortable across the market. I won't be any sector focus. I am sector agnostic at this juncture. We will be focusing on the businesses which have been beaten down because of general redemption in global emerging market space, and due to the deflationary pressure which has caused the damage in the many of the corporate earnings, and currency volatility also has affected some of the businesses. So we would like to analyze the company considering the variables which have changed, but I think there is a value is emerging across the board actually, right? So we will be focusing across the market. 90% of the correction in commodity prices have taken up, and if you look at the absolute commodity prices, my statement is still holding truth, right? You have seen like copper, aluminum, nickel, zinc, or even iron ore is not making the new lows, whatever we had seen 6 months back, which is the close to the bottom actually, right? So what I am saying today, in the commodity business, more than 95% of the producers are making losses. Okay, so the prices can't sustain at this level for long. Okay, so there can be a time correction, we can't deny this, but absolute prices falling from the levels where we are looks very difficult. So I expect the end game is near, and you will see the uptrend in the prices over a period of time, because the prices were reached, let's say in steel, barring the import duty at $280 per ton of HR coil, which is the removing the import duty and other thing, you can't sustain it. We have seen from across the globe, all the companies are bleeding at these prices, right? So you will see, over a period of time, there will be capacity cut, there will be consolidation, and things will look better from here. See, my strong conviction is that the crude oil has seen the worst price of $26. You are unlikely to go below that. Why? Because what we are seeing, the sharp reduction in rig count across the globe. The rig count has fallen very dramatically in last 2-3 weeks, and the rig count has come to very low figure of 540 today. From the peak of 1800 rigs on which were drilling, today we are at 540. So it means the incremental production will stop in the shale oil and all. So I think by November, December, you may have a some kind of balancing in the crude oil market is possible. So in such a scenario, going below the price what we had seen is very difficult. Crude oil, even if the recovers, it will be very difficult to go back beyond 60. Because then the shell will again come, it will become profitable. So I think even in the best time, crossing beyond 60 is very difficult, very, very difficult. We will see certain earning recovery in FY17 without fail. I am so confident about this. Okay, no, you will see from first quarter itself.